Hello good people, Emmanuel Sanyi Safali bringing you the Promise Insurance Show. And this time round I want us to talk about credit and debt. How do you manage them? I know there are lots of ways of managing them, but how do you safeguard yourself? What we call credit insurance. And there are very many forms of financing that are there for individuals and for organizations and groups and companies. So for whatever reasons that you may have for borrowing, it could be for a house, it could be for your car, it could be for your business, name it. Even your health needs. You need credit really and debt to manage. But whenever you go to these financial institutions, you will find that they are deducting an insurance fee. Now, what is that insurance fee? What is it covering? And what are the terms? That's the discussion we want us to have. Please listen in. We are going to talk about the group coverage, the group insurance that is arranged by the financial institution that you're going to. Is it a bank? Is it a microfinance institution? Is it a money lender? We shall also tell you about the details, because interests that are above 3% per month, that is about 36% per annum, are usually not covered under this kind of arrangement. So we need to see what you are covering whenever you see that insurance fee under the credit insurance for the group packages that are arranged by the financial institutions. Then there are those that are arranged on individual basis for businesses that are not under what we call non-salary loans. Those are covered separately. Those are like individual covers. So we shall also look at that and the terms involved. So please tune in and listen to more details. Thank you. Now, welcome back from that short break and intro. So let's now look at what the bankers and the microfinances have arranged for themselves and for their clients. And this is done on a group basis. Depending on their portfolio, they can manage to get these kind of benefits. And the rates this is the bare minimum for a very big bank. But I can also show you that we can also arrange something. For the smaller ones, the rate can be about 1%, where you see the 7th point. But before we get over there, let's look at what are we covering generally. So what are they covering under the group credit scheme? And these are usually for the unsecured loans. Maybe one thing I need to add is this is a product that is meant for organizations that give out loans that are not exceeding 36%, meaning the most the borrower can pay is about 3% per month. Yeah. So if anything is above that, even 4%, I've seen some microfinances crying about that, but that is something that we can discuss on a one-on-one basis. But ideally, it's a package for the large financial credit institutions like banks and microfinances, which are offering a rate of about 3% per month and below, and that is 36% per year. So anything above that may not work for this. If you are taking out loans for just 1 month, you are not going to be covered under such. It should be for at least a loan of at least 6 months and above, up to about 2 years, as we shall see. So what are we covering? We're looking at death resulting from either natural or accidental causes. And that means we shall pay 100% of the scheduled loan amount balance plus the amortized interest rate paid as a lump sum. Now, of course, to the financial institution. And that's the reason why they ask actually for this policy, because you can't control death. And gone are the days whereby you would pass on and then your collateral is taken by the bank without them first taking out this money from the insurance. That's why if you have paid for the insurance, you have to demand that you get a copy of the policy. Yes, the policy will show that we're covering you, the borrower, if it's unsecured loan, and in your names, whatever the client names, let's say ABC Limited, or company or individual, usually secured. These are unsecured loans for individuals in employment. We shall put your name and we shall stroke it with the bank or the financial institution. and that what we struck is called a lien clause, meaning they're the first beneficiaries. The bank is the first beneficiary in such a policy, or in such a claim, in case it happens, like death of you, the borrower. They will pay the bank first because he has the first right to be paid. Then on top of that, there is a total permanent disablement, and that is 100% again of the outstanding loan balance, plus the amortized interest rate paid as a lump sum. Then thirdly, we shall look at the critical illness leading to inability to engage in income generating activities. 30% of the outstanding loan balance is paid up as a lump sum to a waiting period, subject to a waiting period of 3 months, effective from the loan disbursement date. So all these schedules are usually provided by the bankers to the insurance company. Once of that has been decided, at the end of every month, we shall be getting a schedule, or the beginning of every month, to show that these are the clients who have taken out loans and for how long, so that it can easily be known. Should anything happen and the bank tells us that this person has passed away, and you, the family members, in case there was a loan taken out, please inform the bankers as soon as possible so that they can waive, or they can make sure that the loan is repaid and your property comes back into your names. You have to make sure you follow up that whatever collateral is there should come back, and that is how we shall get development, because many people, once the breadwinner passes away and financial institutions take the property without the knowledge of you, the family members, you are bound to lose. So this is a package, making sure, and that's why I've come out today to present it for you to benefit and make sure that you can follow up, because knowledge is power. So let's look at the funeral benefits. Funeral benefits can cover accidental death to the borrower up to 400,000, or for loans above 800,000, and 50% of the loan amount in cases of 800,000 and below. Natural death, we can pay up to 200,000 for loans. These are details. And then we can also cover the spouse up to 150,000. This is usually for a low case microfinance institution. We can increase this on a case by case as long as we have the numbers of the financial institution. Let's look at also the pre-named children from 3 to 18 years, up to 100,000 each. Yes, this is just an additional. It rarely happens, but it can happen. So what is the rate? Here I'm giving you a rate of about 0.5% for a financial institution, a bank, for instance. So with that said, let's look at now the second schedule. What are we covering? Usually a maximum loan period of about 24 months. This is again for the group benefit. Age limit for between 18 and 17 years, 18 to 70 years. And then what are we covering? A worldwide cover. Then maximum loan amount, say about 20 million. Now, what is the example if we use the rate of 0.5% of 20 million, inclusive of taxes? That would be about 110,000. Let's just look at a calculator here. Okay, you will break this, but again, it's needed. Okay, so 20 million times 0.55%. Okay, so that will be the basic premium. Then remember, we have to add okay, Moses, you'll cut this. Let's say 20 million times 0.55%. Okay, so this 110,000 times the rate for, there's a tax of what we call training levy, and that is it. There is no stamp duty, there is no any other levy, so that will be it, such that, oh gosh. So that will be the premium that this particular client will be taking out, will be paying on an individual basis. Then this is a schedule that the bank will present such that we pay them out all at once. Now we're looking at the other additional proposition. The life insurance company shall at its cost conduct training sensitization at all the institution branches with branch managers, credit field officers, then members and groups in a bid to making them equipped with the frequently asked questions, answering customer queries, all that is more details. The group and joint companies, all those can be handled. Claims documentation, of course, you have to notify the bank has to notify the insurance in turn in future, so that the thing is worked out very quickly. Welcome back from this segment. I hope you have learned more about the salary loans and how they are packaged by the different financial institutions and how they are negotiated. Now let's look at those individuals who come in for business proposals, their business loans. You have come in, you are providing your business as the security, you are providing a house as a security, any other asset that you are providing that has assets. Let's look at how it works, and possibly you compare and contrast how it works, and for your own benefit. So we looked at the group package, and then let's look at also an example. I have hidden this because it was used for a certain client, but of course I can't mention the detail. These are confidentiality, but we have to respect the confidentiality of the client, but we're going to use just the year of birth so that we can work out, because this is age based. Yes, so whenever we are taking out secured loans, of course your upgrades differently from the group, which had limitations, and this was for a client having an interest of taking out a loan. He took out a loan of actually 1 billion, and then the bank had to source for insurance packages that would suit him. Now this is what we call the basic premium. This is covering specifically the death element, and PTD, which is permanent total disability. That's the premium that we will charge of 1.75. That means the total premium for this client was 9,589,000 for the year, and this premium is paid upfront in a year, because you're doing a mortgage protection, you're securing it with the properties, but then for the comfort of the bank, the financial institution that is taking it out, or that is giving out this loan, they also make sure that this client, should anything happen, because as we showed you this example of how people are drowning in debt and they are struggling, anything can happen. They are on prayers, as we say, anything can happen during that time. So when that happens, how are you safeguarding yourself such that now the insurance company steps in and pays up this amount of money, quite a lump sum? Then the good news is, of course, on a reducing balance, we know that your loan would have reduced to about 878 million in the second year. That means your premium will also change accordingly to about 8.4. Then next, if we go to the fifth year, you have seen that your loan has really gone down further. As long as there's still an interest of the bank, you haven't yet cleared it, you must still pay your premium, only that it will be reducing. Yeah, so I hope you appreciate how it is going down. And I couldn't disclose the company until it pays for the Kalango, but this is generally how the credit insurance. Now this is for the secured loan. Thank you for listening in. Welcome back from that quite insightful discussion on both the group credits and then the individual credit policies. Now, many times people, even it's written in the Bible in Hosea 4:6, that our people perish for lack of knowledge. Now that you have the knowledge and you're provided with all this information, you won't fall victim to a financial institution whenever you go and you see a statement that insurance has been deducted, and for how long without a policy. you should actually demand for a policy whenever you are dealing with a financial institution. This will help you manage your finances very well, and you will notice that actually insurance bit is actually the most affordable, or has the least cost involved compared to the interest payments that you pay and all that. And even when they are the long-term policies, the mortgages that take even 10 years or 5 years and above, those will keep on reviewing the premiums on a yearly basis. So I hope you have listened in, you have enjoyed the program. Please recommend to many other people. Remember to subscribe to our channel. Also subscribe to the U24 channel. Remember to tune in to this program every Sunday at 6 p.m. and on Thursdays for a repeat show at 11 a.m. Till next time, I remain Emmanuel Sanchez Safali, reminding you to hope for the best while preparing for the worst. Thank you. See you.